Good morning, good afternoon, good night, depending on where you exist in the world. Welcome to IOGE TV. So let's get right into why traders tend to fail. People tend to argue this idea of having a solid foundation around like candlesticks and volume. I don't think many people argue volume as much as candlesticks, but candlesticks are one of those things that people tend to take for granted, especially the traders that have been trading for a long time, because you tend to not trade candlesticks, right? I mean, I don't know anybody that really just trades candlesticks, but understanding how they form and when they form and what process and which ones are breakout patterns, which ones set up reversals, is very important. It's very important to understand that. And so if I had it to do all over again, I'd start somewhere around here, this volume price analysis book. So if I had to start from scratch, I would start there to get a basic understanding of how volume tends to work in the markets. And then I would move on to like candlestick books, understanding candlesticks. So I'm this old, but there are newer books that exist today that help with things like this, right? Like this book, Candlestick Course. You can go through that. So it's a solid way to kind of get an understanding of candlesticks. And what you'll find over time is you'll notice certain things that happen within whatever it is you're trading, and you'll start to realize that these candles actually matter as they build, because they're setting up something, right? The way that things tend to sweep, or that things tend to fake a sweep before they move. So it's very important. It's very important foundationally, where I don't know anybody that trades candlesticks, but I know that when I'm looking for certain moves or I'm looking for certain reversals, I do pay attention to what the candle structure looks like, because it's important, right? It's important to see the breaks being pumped and starting to try to reverse, because I tend to trade reversals. So another thing from there, when you get a solid foundation to understand, is to understand something like this. Not a lot of people tend to share this book. It's a bit old school, but it's really good to understand how basic pattern structure works in the market, how technical setups tend to work. And this gives a pretty solid overview, of standard patterns, and a little intro to maybe like harmonics. So, and so that for me would be the absolute foundation. If you don't understand those three things, now I want to be very clear here. When I say a foundation, I don't mean that you'll be able to trade when you know these three things. Okay, being able to identify them, draw them on charts, see what happens, seeing how the candles and the volume build inside of these patterns to help you understand, are we going to break? Are we going to pull back? What is the edge here? Maybe there might be an edge, right? A statistical edge. So understanding those three things, for me, that is the basic foundation of knowing what the market structure is going to, just at a really solid overview, right? That's what it's going to look like. Now, is that going to show you support, resistance, and all that? No. Over time, understanding where things find support and resistance, that's something that is learned, right? There are many places, because not everybody trades the same. You have some people that are breakout traders that'll cause momentum to move in a direction. You have people that tend to trade reversals, or you have people that tend to trade open range breaks, or there's lots of different things people trade. And do I support those basic strategies? Absolutely not. Absolutely not. There's way more to trading than that. So from there, the next thing I would move into would be harmonics. And if you don't understand harmonics, that in itself is a long process to learn, because just like everything, it's a long process because you have to understand how these things work with harmonics, right? And how the structure of a move tends to build. So, and harmonics, like I said, like it's a long process to learn. People can try to simplify it, just like you can try to simplify anything. But I can guarantee you, if you try to simplify it, you're going to get hurt if you go try to trade, because what you're going to find is you'll start to get some knowledge here, and you'll say, oh, wow, I can see this happening, and you will see it happen. And that's the greatest part about this. If you're paper trading and you see this happen and you're like, boom, I nailed that. Fantastic. Now you have a solid foundation. And now you're starting to understand how that foundation works within how the market tends to move in M's and in W's, right? You set up these impulse legs to kind of move or to pull, which is great. But from there, this is where you start digging in harder into volume and overall market structure, right? You start to learn footprint. And when I say footprint, I mean actual footprint charts, not some garbage somebody else is spieling about anything else. I'm going to say market profile, volume profile, and actual footprint. Understand these things. It is very important that you understand them. Whether you use them all the time or ever again is your choice, but you need to understand those things. All right. And when you can understand candles, volume, and patterns, right? When you get into harmonics, footprint, volume profile, market profile, you'll start to create or design or start to be drawn toward a particular style of trade that kind of fits your eye. You'll start to see something set up and you'll start to see it with all of these things together, right? You'll see a setup form. You'll see maybe there's a triangular pattern in there or a diamond pattern or something that sets up with a harmonic, that sets up at a place of support that you've started to notice over time. And that's when you'll start to get an idea of, oh, hey, guess what? I was able to see this move happen. Does that mean you should start trading tomorrow? No, you should be paper trading this stuff until you become consistent. And this is another thing people, for some reason, just don't tend to do. They tend to jump into spending money, and that's up to you. It's your choice. But this part of the reason people fail is because they blow up their accounts because they get cocky and they think they get a little bit cute with the market. So what do we do after that? So after this, right, then we're starting to move into statistical analysis. Okay. Statistical analysis is the most important part of this. And my favorite argument people make, people focus on the data too much. All of this is data. Everything about this is data. If you trade a support and resistance, you're trading that support and resistance because statistically it works or it doesn't work. If you're trading a candlestick pattern, you're trading it because statistically it works or it doesn't work. It wouldn't be in that book otherwise. People wouldn't notice it otherwise, right? There's a particular triangular pattern that you might look at, or a W or an M pattern. The reason they work is because statistically the setup tends to play out the way that we expect it to. Does it mean it always does? No. Right? So, and I don't mean statistics in that manner. I mean statistics in when you figure out your style of trading. Okay? You figure out your style, you figure out the trades that kind of fit you. And from there, what you're going to start to do is you're going to start understanding certain strategies that you might want to play. If you find a place of support that is setting up a particular thing that you like to trade, there's one piece left of that, okay? And so the last piece of that is the statistics around the overall day or the overall week, depending on what you're trading. I'm a day trader, so I tend to do all of this for the day. And so the reason I bring this up is because if you are not to the point where you're understanding how things are going to work out statistically, you are gambling. You are guessing. Okay? If you go to a casino and you throw money on a table and you don't understand statistically how that's going to work out for you, you are gambling. If you go into the market and you take a trade without understanding statistically how it's going to work out for you, you are gambling. Okay? This is the biggest thing people tend to miss in trading, and it's because there's these people out there that want to tell you, oh, I've got this strategy that's going to win and make you a lot of money. They're full of crap. All of them are full of crap. Nobody that has a successfully solid winning strategy is going to share it with you. Okay? Nobody is going to give you their edge. I'm no different. I'm not going to give you my edge. Now, teach you how to build your own strategies and how to come up with your own edge? Absolutely. I'm definitely down to do those things. But to give an edge that's taken me years and years and years to put together, I'm not giving that away. Now, there are some pieces of that I absolutely talk about in our Discord room. But outside of that, the foundations, if you can build these foundations and you are a person that tends to work really hard and, focus, this is how you go about it. It's a lot of work and it sucks. So let's look at how that tends to play out in real life. So let's say tomorrow you decided you wanted to go be a PGA player, or you wanted to go play on a pro soccer team or whatever. Okay. But golf is a great analogy because you can go buy the same golf clubs that these pros play. They're not going to be built the same way, right? Because they have people that will adjust these clubs for them daily. You can play the same golf ball for the most part. You can play the same golf courses from the same tees, sometimes even the same pins that they play. But the interesting thing is, just because you can go play that course and you do okay, it doesn't mean you're going to go enter a tournament tomorrow and win, right? When there's money at stake and there's people watching you and you are playing against other people, like there's a lot more to this game. And trading is very similar, right? You can go walk in and leave with less money than you had yesterday or this morning. Okay. It's very important to understand this. You go walk in, you paper trade, you don't trade real money until you are a consistent trader. Okay. Because even when you become consistent and the money becomes real, the pressure is different. Just like going to play a golf course by yourself versus in a tournament against other professionals with people watching you. It's different. You have to learn to win properly, you have to learn to lose properly, and you have to learn to sit on your hands. If you come into this game and you think that you're going to come in here and, I'm going to run out of money, I need to go make money quick, and you think the stock market is going to do that for you, that is not the case. Just run. If you're a gambler type of person, run. This will ruin you because it's easy. It's basically like having a casino at your computer. It will not end well for you. The number of people I know that jumped into GameStop and all these other stocks that were up $10,000, $100,000, $200,000, $1 million that ended up losing money because they didn't know anything about trading. They were just listening to idiots on the internet. And call me an idiot on the internet. I'm okay with that too, because I'm just another talking head right now. All right. At the end of the day, they lost that money because they didn't know anything about what they were doing. They were gambling. All right. So let's talk about it. Let's have, if you're interested in learning, I'll happily teach you. I'm not going to do it for free. We do have a room. So come on. I'm happy to have you. So when you get into the statistical analysis part, if you're interested in day trading, we have a database for that. That is something that you can pay for access to. You don't have to go build that on your own. All right. Well, I hope everybody's doing well. And I hope that this maybe helps if you're a new trader or, if you're somebody that just, you can't get it figured out. Like, come on. Just don't be a baby. Don't be a crybaby. Be a self-starter. If somebody does well and you do bad, be happy for them. Because one day, the next thing's that's going to be on the flip side, right? You're going to be the one that's doing well. Somebody else is doing bad. And you're going to want people to be happy for you because you nailed something. Right? You can't attach your self-worth to how you trade. You cannot do that. It will ruin you mentally. It'll beat you down. You'll hate yourself, and it's just no fun. Right? It's just no fun. Okay? So I look forward to hearing from you. Hopefully this helps. Have a good one.